All right, shall we? Are you able to see my screen?
Webinar we see.
Yeah,
Yes.
that's
Okay, good.
great.
Yes, this is the one. All right. Okay. Good morning, good afternoon, good evening for everyone. Our side here is 8:30 p.m. So for Christopher, it's in the morning. For you guys, the rest is in the afternoon. Okay, so today we'll be focusing on doing the revision that what we have gone through. As I can see, before I started, let me introduce myself. My name is Ho Chiang Seng. You can call me Seng. So normally all my friends will call me Seng for short form.
Yeah, and my name is Terence. So you could call me Terence. And we are here to party. So there will be a lot of interactive in this session. There's a lot of questions. Please ask. We don't expect you to be quiet all the time or most of the time. So if you can, any question, just show it on us. And this webinar is purely for you. All right.
Okay.
Yeah.
All right. So I have the screen now. As you can see. So first of all, when we notice that a lot of students sending the assignments, most of the time people get wrong is the confirmation of rejections. Now the reason why is because I think that a lot of people still do not understand how do we identify the rejection after we mark the zone. So marking the danger zone. So we're marking the danger zone SNR is very simple. There are 4 steps, isn't it? So after we mark the danger zone, then how do we can identify that the price have rejected the area? So let me see. Okay. Confirmation of rejection.
Oh, I think you better silence your music first, please.
Oh yeah, sorry. I'm sorry. I forgot about the music.
Sure. All right.
Okay.
Yes, there you go.
Thank you. All right. So what is a confirmation of rejections? So after we have marked our danger zone, so after we do the 4 steps, for currency pair is always advisable on the weekly and the monthly time frame. Under certain circumstances, only we will use the daily time frame. So when do we use the daily time frame? Is only when the daily and the weekly time frame are in the same zone. So then we will want to make the zone much smaller. Then we will use the daily time frame. Then we can monitor it even better. So once we have the daily time frame, we mark it, then we can see that price comes into the zone. And how do we identify the COR, confirmation of rejection? So actually, we will use the candlestick reversal signal as our price directions, because it is important that when the price has reached the major support and resistance, which we are referring to the monthly and the weekly time frame for danger SNR. So until there is a rejection, which we will use the indication called the candlestick reversal signal, then only we will find setup. So I always mention this often in the group, wait for rejection. So how do we know to wait for rejection? Because once we have a rejection, then only we will find opportunity to trade. Without rejection, we cannot trade, because you know why? There is no seller or buyer that goes in when price is going on a reversal trend. All right. So here I'm going to show you. This is the most very basic and very commonly used for reversal candles, the bullish and the bearish engulfing.
All right. I'd like to ask all of you, do you have any questions so far regardless about the rejection? Any question? You can put in the chat box. If your background is not noisy, you can unmute your mic and you could speak to us. Otherwise, you can put in the chat box. Not yet. Great. Thank you. Hi, Alan. Hi. Good morning to you. Let's say, do you have any question? If no question, Ho Chia Seng will continue. Yeah. Sorry, Ho Chia Seng.
No problem. I will proceed. Yeah. Okay. So I think everybody is very familiar with the bullish engulfing and the bearish engulfing, isn't it? Okay. So I think that this engulfing candle, I did mention in our very day 1 course inside there, how do we identify the good bullish and the bearish engulfing? Okay. So this is the common one. The next one that we will always see is this type. It's called like this. So there are a lot of names that have been given outside. Actually, we can source this in Google. It's very easy to find. All right. So the very common one we always hear are like the pin bar, 3 black cross, 3 white soldiers, morning star, evening star, or whatever it is. There are a lot. So this is some of the CRS that we can identify. So how do we use this as our CRS? We use this at a higher time frame. Okay, so for example, when we mark the danger zone, when we mark the danger zone in a weekly time frame, okay, on a danger zone SNR on the weekly time frame, then how do we identify the CRS? We will use the weekly, daily, or the smallest time frame is the H4. Okay, I think you guys are aware of this one. So on a danger zone SNR weekly time frame, we will use the weekly, daily, and the H4. So it's only 2 time frame below for our confirmation of rejection. So we will use the CRS as our indication that price has rejected the zone. Okay. So here's another thing that we can always see, very common, that I can find in Google as well. So these are the very common things that always we can find in our danger zone SNR. So how do we identify which one is the uptrend and which one is the downtrend? These are all the reversal. The reversal candle showing us that the trend is about to change at a higher time frame. So we do not use this CRS, confirmation or rejection, at a much smaller time frame. So for example, M1, M5, no, we will use this at a bigger time frame for pair. Okay. So the next thing I'm going to tell you, now I think you guys are very familiar with this one. So after we have marked the danger zone SNR, so for this example is a resistance. Okay. So before I continue, is there anybody still have any issue with marking the danger zone for SNR?
Yes, if you are not convenient to speak, you could write in the checkbox. Otherwise, we will just proceed. Yes, Pina, any question? Abme, any question? Alan.
Thank you, Chief. I think danger zone is clear.
All right.
It's clear, right?
Courage, Muhammad, Nida, and all good. All right, good. So yeah, we may proceed then.
Okay, good. So danger zone SNR, the marking is very simple. I will repeat this again. It has only 4 steps. So it is not very difficult to identify. Most important part is that you or we should use the correct time frame to mark our danger zone. So if we are using on the currency pair, as I will highlight again, always use on the monthly and the weekly time frame. The daily we will only use if the daily and the weekly time frame are in the same zone. So to minimize our zone, we will use the daily time frame inside the weekly danger zone SNR as well. Okay, so I think this one is very clear. So for gold case, on a London or the US session, most of the time we will use on the higher time frame. So you can use H4. Okay, so H1 only can be used when we are not in the high volatility period. So for example, is the Asian market or after the London session has closed. So these are the 2 markets that we will always be using. It's not recommended to use during the the Australia or the New Zealand. There's another session for that. Okay, because that time most of the broker are closed, I think. Okay, and there's a one hour period the market is not moving. So after that, we will, once the Asian market open, then you can mark your danger zone for H1, H4, or the QM level, H1 and H4. Nothing below than that. Okay, so those are very easy to mark your danger zone. Okay, so for gold, again, I repeat, H1, H4 during the non-volatility market, and don't forget your second movement. Very important. Any H1, H4 without second movement is very weak. All right. So come back to this slide here. So for example, there is a danger zone SNR resistance here. So this is a bullish candle, okay, a bullish Marubozu candle on a higher time frame. So once price comes into this zone, touch this zone, and close the candle like this. Okay, do you guys know what type of candle is this called? Anybody want to guess? Giving you a few seconds. Yeah, I hope somebody won't tell me that this is a bearish engulfing. Yeah.
Doji.
Okay, yes, correct. Partly doji, but this is not the doji. Doji is more like a plus sign. So if I can draw something like this. So this is doji, yes, like that. Okay. So your candle body normally is very small like that. Or there is no body candle, it's just only a plus sign. So that is a doji. So besides this, anybody can tell me what is this?
Inside candle, is it?
It is very common. You will always see this very often. People will always say this. I'm not sure about you guys, but this is what we call a shooting star.
Oh, yeah.
Okay, so let's go back here. I'm going to show you here. Let's see. There we go. Shooting star. Okay, so this is uptrend. On the uptrend, okay, up. You close this like this candle like this, so it's what we call a shooting star. Okay, so once price close like this, so this is one of the confirmation of rejection. However, this is what we call a medium risk. Okay, medium risk. Why did I say this medium risk? It's because remember, to be in on the reversal trend, what are the things? What are the SOP that required for it to become reversal? Anybody want to take a guess again? So this is uptrend. Uptrend, what do we have? We have the higher high, higher low, higher high, higher low, higher high, higher low. So for a price to become on the reversal trend, what is the structure that they need to break? Anybody want to take a guess?
High or low.
Okay, let me draw again one more
To
time.
make a lower low.
No. Let me hold on. Yes, make a lower low. Correct. I guess Pina, you said that, right?
Yes.
Yeah.
Okay, lower low. Yes. Okay, good.
Wait, Ho Chia Sing.
Yes.
The rest, are you clear so far? Because we are concerned because once we check your assignments, right? Some of them make a mistake, a common mistake, which there's no rejection from the danger zone SNR resistor. So right now, that is the best time to ask if there is no clear cut from your perspective, so that we all could rectify it right now without your confusion. So Alan, you're good. Christopher, are you good? Nida, are you good? Koiraj, are you good? Ahmed, are you good? I need some feedbacks from you. I mean, instead of just whole talking, break of structure is a lower low. All right, great. Anyone else? Good. So Muhammad, you are good. Great.
Yes,
Good.
so far good.
So far good.
Very clear, right? Yeah. Okay. So what I'm trying to share here with you guys is that okay, this is a CRS, and then gonna leave you. Okay, that's where you find a sell setup. No, I'm not gonna tell you something like giving you a signal. I want you to understand what is the structure is going on and what is the price doing, so that when you understand what is the price doing, then you will understand whether we should enter or not for this particular setup. So in this case, like I said, we need to break the structure. Okay, so to break this structure, we need to break the higher low structure and then form a new lower low. Okay, so how do we know that this price won't prank us? Anybody want to take a guess? It won't prank us go up like that. Why it doesn't take on the QML here? Instead, it pranked us and went up. Anybody want to take a guess again? Right? So normally when we see a structure like this, higher high, higher low, higher high, lower low. So normally for SND traders, we will always wait at the QML level here, isn't it? For the QMR setup to continue on the downtrend. But how do we identify that we are not being pranked? Like this, price will go continue on the uptrend. Anybody want to take a guess again? The answer is here. It's very clear.
Yeah, confirmation.
Okay. Yes, you have one. But however, this confirmation of rejection is not strong enough as a reason. So another reason? Confirmation of rejection is partly correct, but what is the first thing first it must do before has the confirmation of rejection? The answer is here. It's in the slide here. Yeah. Before confirmation of rejection happens, what does the price does? Any more guess? No stress, let's apply some. No. Okay. So the answer is it must touch the danger zone SNR first.
Oh,
It's
yes.
always must touch the danger zone SNR first. So if a price, let's say we mark this zone as our danger zone SNR, and then price didn't touch this danger zone, and it does for example, I'm going to make here a bearish engulfing. Okay, so this is a bull candle, BU. So this is a bear candle, BE. Okay, so price made a bearish engulfing, but price did not touch the danger zone SNR. So what happens is that normally price will break this QML structure and come up to this danger zone area and then continue on the downwards. Now, another thing, when we thought that, okay, we're going to sell here, but price did not react to the shoulder on this QMR. Instead, it went up. Okay, so once it went up, we thought that, okay, it's going to take our SL. Exactly, it took our SL. And then the next thing, what we do is, there's a base here. What should we do? We want to trade on the continue uptrend because this is a QMM setup, isn't it? So we wait here again. We've set another PO, okay, for buy. Then price come into this area, did not respect and continue on the downtrend. So on the buy, on the sell, you lost. On the buy, also you lost. So remember, guys, when the price reacts from the danger zone SNR, have to be careful. For this case, price did not touch the danger zone SNR, and then you want to set your QMR level here on the sell, most probably it will break. And then just when you thought that this is a QMM setup, you want to put on a buy PO on this area, price react on this danger zone SNR and continue on the downtrend. So you've been conned twice. So very important, this danger zone SNR is you must always keep. Now remember, guys, the basic for SNR level will never change. Okay, when I say will never change is that no matter how the big traders, they must always respect the SNR SNR area. Okay, so let's say it's kind of a bit messy here. Let me clear. Okay, so let's say on a big time frame, right, you have the weekly, monthly. Okay, so these are all the SNR level. So all the SNR level you must mark. Okay, all SNR level you must mark, because you know why? Price will always react towards all these SNR level, whether it breaks or not, we must always mark. So when example like this, when price break this resistance, okay, when price break this resistance, we do not take the SBR or RBS as a danger zone. Never. Okay, SBR or RBS as danger zone. Okay, SDZ is no. Okay, no, never. But instead, if price comes back here, broke, we can take this as our future resistance level. Why? Because of the QM. Okay, QM level, our left shoulder. So one of these. Okay, so it is very important that you understand that all the SNR level we must mark. Normally, big players, they have to respect this SNR area. Okay, so once there is indication that a CRS has occurred, which is the confirmation of rejection, then only we will look for setup. If no, don't. It will might probably break this area. Okay, break this area and then continue on the uptrend or come back down and broke this area again. So it is very important that we must always use our confirmation of rejection inside the danger zone. Sorry, not inside. React from the danger zone. Okay, so you guys clear on the SNR level? Anybody has any issue with SNR level? Support and resistance. The basic of Forex trading. Anybody has any issue with SNR? Identifying SNR? So if you're not sure how to identify SNR, you can change to the line chart. All right. So those people that are very familiar with the SNR level, we don't have to change to the line chart. For example, here, SNR level is this. See the body of this candle. Okay, so this will be our SNR resistance in this area. Anybody has any issue with SNR level right now?
I have Chip, about the H4 SNR.
H4, okay.
Yeah, due to different broker candle.
Okay.
How do we handle this? I mean,
because
on one broker, it has touched the danger zone. On other broker candle H4, it hasn't.
Okay, very good question.
Sometimes it makes confusing.
Yes, I understood that. I'm aware of this one as well. So thank you for raising these questions. So for H4 case, okay, so for H4 case, normally H4 for every broker, some broker has the same, some broker are different. It's because of the time that the candlestick close, right? So maybe for Just Forex, okay, the 4-hour candle will start probably at the 12 noon. Okay, just giving example, 12 noon, and it will close at 4 in the afternoon. Where else for another broker, maybe ABC broker, okay, ABC broker, maybe the H4 candle will start at 1 o'clock and it will close at the 5 o'clock, okay, and then another broker, maybe CBC H4 candle, it was open up at 2 o'clock and close at 6 o'clock. So all of these brokers are different. So first of all, H4, where shall we use H4? Not on the pair, no pair, okay? No currency pair shall use H4 as a danger zone. All right, okay? We only use H4 on a gold. Okay, so how, if let's say we mark all the danger zone, right? So how do I identify that which broker are the correct? Actually, there is no such thing as correct or wrong for all the broker candlestick. Like I said, how do we identify it? Let me clear all of this again. Danger zone. So let's say this is a gold, H4, danger zone. Okay, resistance for gold. First of all, like I said, once price comes into the danger zone SNR H4, doesn't matter which broker, whether it's A broker, B broker, C broker, all has a different H4 candlestick, must always wait for confirmation of rejection. Okay, confirmation of rejection. All right.
All right, okay. On top of that, to support the question just now, Korash, you asked us like, okay, there's so many brokers, different confirmation. What I do is I will go to the trading view. I will look for Oenda. So trading view Oenda, usually this is where the traders will use to cross-reference with your broker. So sometimes you see your broker and the Oenda trading view, then you're like, hey, there's a big difference, especially gold. So which one will you take? Trust your broker more, because your broker is the one that liquidity provider, not Oenda in trading view. So to me, always look up to your broker first. Prioritize your broker first.
Yep.
You got it? Koi Rush.
Okay, good. So
Okay,
Koiraj,
got it.
Okay.
yes. What I normally do is like this. I know that we always have a H4 different candlestick, right? As you can see, I will put here like multiple gold. Okay, so for Oanda, if you look at H4, the Oanda candlestick, and if you look at the Saxo, sorry, there's another, yes, Oanda and Saxo has a different H4 candlestick. Okay, so you can see that. Is it different? This. Yes. Okay. So Oanda and Saxo has a different candlestick. So I will use this both as my reference. So I will mark my danger zone SNR as both. Okay. So if I see on, for example, like Saxo, okay, let me clear all of this. Remove all drawing. I'm gonna remove this as well. Okay. Remove drawing. So let's mark the H4 DZ SNR. Okay, I'm gonna mark here. Okay, let's say this area. Okay, and another one is this area. So I'm gonna mark the H4 DZ SNR. Okay. All right. So for this case, this doesn't has a strong second movement. You can see, you only can see like this. But to me, like this is not beautiful. We want to have a second movement like this. Okay, like this. All right, and then it goes like this and like this. So this one is a beautiful second movement. However, if you want to take this as a second movement, yes, can as well, but it's just that it's not so beautiful. But if we go to the H1 candle, you can see that this is a strong second movement. Okay, so come back to the danger zone SNR. So I will mark our danger zone on this particular Oanda, okay, broker, and then on this Saxo broker, I will mark as well. Okay, I will mark as well the danger zone SNR. So both of these broker has different area, but almost react at the same place. Okay, however, the candlestick are different. Okay, candlestick are different. Sorry, there you go. Candlestick are different for Oanda and also Saxo. So I will just mark both. Doesn't matter. Now, currently, price react in this danger zone support for Saxo broker. Okay, but if you go look to Oanda, price is reacting at this end of this H4 support. Okay, so you can see both are different area reaction. Actually, here as well, you can mark. Yeah. Okay. So even though it has different, I will normally just mark both. Okay, just in case there is an opportunity. Most important part, as long there is a confirmation of rejection from the zone that I mark, then I will look for setup. Okay. So is this clear, Hoirus, or do you have anything, any additional question you want to ask?
Clear, Chief.
Clear. All right.
All
Very
right.
good.
So there's a question. Hold. Give me for. So for Archie asks, for intraday traders, which time frame do you look at? So it's a fundamental. Archie is back to the fundamental. You always look for daily first, or you look for weekly. But to me personally, I'm intraday trader as well. I will look for daily for direction purposes. Where are the prices reacting? If the prices reacting from top or bottom, then we would know. Otherwise, it's like middle of the candle, which is daily candle, the sideways, then you will trade intraday. How? You go to H4, you go to H1, and you go to M15. And that's how intraday trades. If let's say you want to do scalping, you can go to M15 to M5, but priority always daily time frame. Because like what Ho said earlier, the SNR, any traders, any part of the world will respect no matter what. So that's for intraday traders. Archie, does it make sense to you?
Another question. So regarding that, if there is no second movement in a
Yep.
daily resistance or
Timeframe.
support, does that mean it's not valid, or can you still trade off the reaction from that level?
Okay, good question. So if on the daily time frame, right? We're looking at a daily time frame, isn't it?
Yes.
Okay, daily time frame. So example, let's take this as an example, our daily danger zone on the resistance, and then this is our support on the daily time frame. So as we can see, that price go up here and doesn't has any second movement, it goes down straight, right? Okay, so for normally, if you do a back test on this kind on the danger zone for without any second movement, normally price will easily break, very easily. It will just break. We've done a lot of back tests. Chip Helmy has done this a lot of back tests as well. He said normally without second movement is very weak, very easily break. So you can have a look certain area. If that doesn't have any second movement, you can just mark as your danger zone as well. Okay, could be that price will react on this area and then go up. Okay, but it's just that most of the time price will break this area. However, if you're looking at the monthly time frame, okay, on the monthly time frame, then you do not need second movement. Monthly TF time frame, you don't require second movement. Okay, only weekly and below. Okay, weekly and below for all the danger zone that we are marking. So monthly time frame, you do not require second movement. So weekly, daily, H4, H1, yes, you do.
What is the theory? I'm sorry. What is the theory behind second movement? What does that? Is that the same as failure to return, or what exactly does second movement do?
This right. Actually, for the theory, I'm not quite sure, but most of the time that if you're talking about supply and demand, the reason why price has a second movement is because certain area price will, buyer and seller will normally discuss the price on this area. So when they discuss price, they require further discount. So it means that price to continue go down, it won't just go down one straight line like that. It must go zigzag. Why? Because of liquidity. That's all I know for supply and demand. It requires liquidity for the price to move in wave like this. Okay, it won't go straight down. Oh, straight like that. Like that is very easy for all the buyers and sellers to predict the price that's going to continue to go down. So normally price will go down, up, down, up, down, up, down to look for liquidity for supply and demand. So the real reason why for second movement this can happens, honestly, I'm not quite sure, but it's a good question. I will try to investigate this and I will check out with Chip Helmy again. Once I got an answer, I will reply back to you. Who asked this question? Is it Alan?
Archie.
Archie.
Archie, okay, good,
all right.
Archie.
Archie,
Take note of
okay.
this one.
Archie, that's a very good question, especially it's not about FTR fail to return. The purpose of this second movement is because of there's a price negotiation of part of SND. Okay, price works on dynamic. There's always a buyer, there's always a seller at certain point, which is they meet and match. So like what Ho mentioned just now, the price can't go all the way down. There will be a price that, okay, this is OHLC. The fundamental of trading is always as open, high, low, close position. And this second movement is involved a lot about OHLC. And why there's a pattern of OHLC doing the second movement, simply because price, liquidity, like I say, let's say I give you an example. Right? Let's say price, Bank A, Bank Citibank, okay, let's stay from US, Citibank. Citibank wants to pump in $10 billion into the Forex. They wanted to sell. The question is this, Citibank can't pump in at one shot at 10 billion because there wouldn't be sufficient of liquidity. So they will go by stages, at what Ho is drawing right now. They will go by stages. And usually this money comes in when there's a liquidity happen in the second movement. Does it make sense to you, Archie?
I see. Okay.
Okay, you see, let's say, because if they want to pump in 10 billion, right, there's no such thing, they pump in 10 billion one shot at one position. That's the reason why they need to go by stages. And stages happen by second movement. Are you getting it, Archie?
I see. Yes, yes.
All right, sure. Thank you.
Uh,
Yes, Booker, okay, if there's not enough buyers or sellers at the level, then the price has to go to the discounted price. Yes, Alan, and this is because of this liquidity. They need to search for liquidity.
can I ask something?
Yeah, sure, Nida.
When Ho was explaining, he said something about the back test, that prices like this is or prices coming down. He said when there is no second movement here, it can easily break this support.
Yes.
But when I think to validate this support, I look for the second movement here, right? This to make it strong to the right. I check for the second movement on the right, but we also look at how the price is approaching to see the second movement here.
Yep.
Did I make myself clear, or should I ask again?
Okay, let me try to understand what you're trying to say here. So you were saying that, okay, for this price, it doesn't have any second movement, right? So it made the support, and then price goes up, reacted a little bit, and then continue on like that.
Yes.
That's what you're saying, right? So
Yes.
where should you look for the second movement? You're saying, is it?
Yes, you said it can break easily when there is no second movement here, right?
Yes, yes.
But
Okay.
to validate a strong support or resistance, we look for the second movement
Yes.
here, right?
On the right
Here?
side, not on the left.
Right
on the
side,
right.
yes.
Yes, on the right side, correct. So
This is
for this
R.
case, yes, R. So this is a good resistance level because it
Yes.
has a second movement. Yes, exactly.
So what is of this one's point? It comes, if it comes without a second movement, you said it can break this one easily. This one.
Okay, so you're saying about this support, right?
Yes, this support.
right? Okay, okay. When this support, it happens like this on the up like that, right? So how do we know that this support is strong? It must look at this area, whether it has any second movement or not. So if it doesn't have second movement, then it will normally easily break. Why? It's because of the wave movement. Okay.
Okay.
Yes.
I see.
Yes, because of the wave
For
movement.
me, I understand. When I check the second movement from higher time frames to lower time frames, I think it looks like a full retracement to me. Like, for example, this is the downtrend.
Yep.
It comes, retraces, continues, like a retracement, full retracement, second movement.
Full retracement, second movement. Yes, yes, yes. It's like a retracement area like that. Yes, continue. So what we normally call for SNR, like this kind of case, is what we call big movement. Okay, this is what we call big movement. Then you have like this, and then you have another big movement. Okay, like this,
Yes.
and a big movement.
Yeah.
So if let's say we look, continue. You're saying.
Steep accurate.
Okay, I try to make it simpler here.
Okay.
So let's say if it is on the weekly time frame, let's look at the weekly time frame. Okay, so normally weekly time frame, it will works like this. Okay, so this is a resistance, this R. Okay, R. So this is a second movement, and then it comes to a support. Okay, so this is a support, this is the second movement area. Okay, so weekly it will looks like this, but however, if you change this whole thing to daily, it would look like this. Okay, you understood? So that's why it's better that if can, we look at the higher time frame like weekly like this. It has a resistance, a second movement, and support. So you do not have a lot of noise because we want to avoid the noise. When we said noise, I'm referring to this wave. See, there are too many waves. So when you have too many waves, you're not sure which are, you have to keep monitoring, and then you see it breaks again, it breaks again, it breaks again. So in the end of the day, we choose the danger zone SNR that has a strong at a higher time frame like this. So we know that the price will continue go upward. Whatever happens, once the price in this area has a confirmation of rejection. So in this case, this is a weekly time frame. So on the weekly, daily, or at the hash most. So once there's a confirmation of rejection, then only we will look for setup. Okay. So once we have the setup, so we know that we can what they call what's the word already? Swing for swinger. This is what swinger normally does. Once there's a confirmation of rejection, they will swing their trades going up. So for us as intra traders, you can start buy from here. If you want to become a swinger, probably you can put one layer and continue to hold. But for intraday traders, this is when the opportunity we will take this as a trade. Okay, as a trade. Yes, we will look for buy. The moment it retraces, we will look for buy. It will retrace, we look for buy. Now, how do we look for buy? For SNR trader, they will use this as resistance become support. Okay. Whereas for us, we do not use this. We will use S and D as our entry point. Okay. Because normally, why RBS is not strong is because, do you guys familiar with the SNR RC2 setup? That is a very good setup to avoid you being conned. Why? Because could be price went up like this. So for SNR traders, okay, let's set a PO here, or not PO. Let's say let's buy from here because price has broke this structure. When price comes back to this here to test as a new support after it broke the resistance, then all the SNR trader will start to buy from here. Okay, so here in respect, okay, SNR trader make monies. So another level again here. Okay, this was an R, previous R. It broke this structure R. So the SNR again to buy in this area. However, this time price do not respect here. It took all the SL and comes here, comes back to this area and continue on the upwards. So you guys familiar why this setup is? Anybody want to know?
Yeah, it's SNRC2.
Yes, exactly. And SNRC2. So SNRC2, when we have a good confirmation, then we will know that we will not be praying using the RBS setup to trade. So SNR trader will normally got hit by SL because of this. Then they said, oh, market is not belong to us. It's not that market doesn't belong to us because they do not understand supply and demand. Very important to have supply and demand and support resistance both combined together. Then only we can understand which area shall we buy, which area shall we sell. For this case, as SNRC2, that's why we must break two resistance. Okay, resistance 1, resistance 2. Broke both resistance, then we'll come back to this R, the R1 as our PO level. Of course, when we want to buy on this SNRC2, what is our reason to buy in this SNRC2? How do we know that this price won't go down? because of confirmation setup. Okay, so your setup confirmation, for example, maybe you can use bullish engulfing, okay, or engulfing candle. Okay, the setup has to be inside the engulfing candle, not at the wick. Okay, not at the wick, but in the candle, body candle. So once we have confirmation set up like this, then we can put our PO buy in this area. Price comes in, react here, and continue on the uptrend. Now, if we look, now how do we trade here? We're using the NORA entry. Means we can use at a much smaller time frame. So for example, this SNRC2 after reacted from this support area, okay. So this is a daily time frame we're referring to, isn't it? So based on here is a weekly price react here, have a confirmation rejection, and it made an SNRC2 set up on a daily time frame. So how do we entry here using the NORA entry? Means we can go up to the M15, M5 setup. When price comes in here, react, okay, it rejects. So this is a daily time frame. Our confirmation of rejection, we should go to H4 or H1. Okay, then you look at the setup, look at the setup M30, M15, and M5. I ever entry GBP and ZD on a weekly time frame, on an M1 time frame as my NORA entry. Okay, my risk was only 4 pips, but my take profit was 200 over pips. Okay, so this is how we use the NORA entry. So this is a daily SNRC2 setup. Use the NORA entry at a smaller time frame. Once there is a confirmation H4, H1 rejection, okay, then only you entry using the smaller time frame setup. Okay, then your risk is much smaller. Instead of this zone could be 50, 60 pips. Okay, so come back to this question. That's the reason why we use the higher time frame, okay, weekly as our danger zone SNR. So at the daily, it has so much noise. So when at the daily, we will see this like, oh, it's just a retracement, it will break. That's why we do not recommend using the daily time frame as our danger zone SNR because of this. Okay, but if this case here, on the weekly time frame is a support, okay, danger zone support, but at the same time, daily time frame, okay, daily time frame is also in this zone, then we can use the daily time frame as our danger zone SNR, so that our zone from this big area could be probably 80 pips, and then we move on to the daily time frame could be 30 pips. So from 80 pips, we cut down our danger zone SNR to 30 pips. Okay. So for this example that I'm giving now, is there any question or you guys still don't understand what I'm trying to explain here on this area? Anybody? Let me change my color. Yep, here. Anybody still don't understand?
This is brilliant. Thank you, Alan. The rest? How about
Good.
this is good. Oh, thank you. What else? Anything else? I give you a tip to.
I have another question before we move on to another subject.
Sure, Pina.
Thank you. About the confirmation reversal signal, can we say, is there a maximum number? I mean, is it 3 to break the structure of the counter move? Like, for example, if we take this one as the example, we have a bullish candle before the price coming to the danger zone, and when it reacts from the danger zone, should we look for maximum of 3 candlesticks to break the structure of the blue candlestick?
That's good. That's good. That's a good question, Pinar. Okay, good. Actually, I'm going. What you said that I'm going on the next after this. So I'll explain that in the next after this. After
Okay.
settle this. Yes, a good question. Anybody else has any other question again? Besides that,
I have a question. Can you take a trade off of the danger zone? Can you, let's say you put a pending
PO?
sell, PO
Yeah.
up there, sell order,
yeah,
sell limit. Even if there is no second movement below, but you want to
Okay.
trade the reaction from the danger zone, is that something that you would recommend or you guys do?
No. First of all, danger zone. The reason why we have danger zone is not for us to put our PO, definitely, because this is very high risk. Okay, high risk. They actually you can put, but of course the risk is very high. How are you sure that over in this area, all All right, there is a order that has been waiting for the price to continue go down. Okay, if you are very strong with fake out, yes, maybe you can put PO here. But if you're not sure about fake out area, then I would suggest this is the most safest and the smartest way to trade. We mark our danger zone. Once there is a confirmation of rejection, then only we will look for setup. So the setup has to be inside the engulfing candle as well. So this is the most safest way of how we can trade, because the reason why is we want to mitigate as much risk as possible. We want our trade to be low risk, right? We want our trade. I don't like float. For me, me as a trader, I don't like my setup to float until 30 pips, 20 pips. To me, I will get very frustrating when I see a lot of floats. So that's why I love these systems using this NORA entry. It is very smart, because you know why? If you have these systems, price only reacts, probably float a little while, could be only 3 pips, 5 pips, 10 pips, and then it will goes to our direction. But if, let's say you put a PO here, right? Okay, now let's say this is a weekly danger zone on the resistance. How long do you think that the price is going to play this area before it comes down like this? So yeah, it's going to be very long. I'm not sure if you're happy to see the red colors in your pen, what do you call your floating order, then go ahead. I mean, nobody's going to stop you, but the best way to trade is after reaction from a danger zone, there's a confirmation of rejection, then only we'll look for setup at a smaller time frame. So when you entry, you will entry with confidence. Why? Because the reaction here, it reacts from the SNR level. As we said earlier on just now, price, okay, you see here, price, bank will put in 3 million, okay, on for sell. It reacts a little bit and then continues, goes up. They put in another 3 million, continue, go up here, 4, and then it will goes all the way down. So we know that in this SNR area, there is a big order being put by the big traders. Now, let me tell you, Chip Helmy was saying this. He said that for big traders, right, for those big bankers, the only weakness that they have is that, first of all, they must look for liquidity. Second, they have to put their pending orders. They cannot put instant order, because why? For a big company, for example, you want to put in, let's say in this area, you want to put in 10 billion. Don't tell me that, okay, I have the authority button for sell. So instantly, me as a big trader, one person clicking the mouse button, sell, and then you can sell. No, why? Because corporate will never allow a person to do a transaction by only one approval. Why? Corporate require a lot of system. So for example, for the big traders, before they want to put in 10 billion, of course they must get approval from the boss, right? So let's say from the bosses, they have to go through multiple levels, multiple management, multiple approval before they can have this 10 billion to put in as their order. All right. So they have to put the pending order beforehand. So that is the weakness for big traders. That's why we can take the SNR level as our reference. Okay. So once it reacts inside the danger zone SNR level, then we will know that, okay, there's a confirmation rejection. We know that price is already rejected from this zone. Then it will go continue on the downtrend for this example, because price big traders has already put in their orders in this area, because we do not know which are the price that they're going to put the big orders, but we can identify using this as our reference to know that, okay, yes, big traders has put in the order. There is a big order here, so we're going to follow big traders to sell for this particular order, for this particular trade. Okay, so anybody has any question on this one? Did I answer your question?
I think we can proceed already. So far,
Okay,
so good.
good. So far, so
Alright.
good. Yeah. So there's a reason why we don't set a PO, because you know why? PO only been set by the big traders. If your friend works in a big bank, then we can give him a call. Hey, wait, which price do you put your big order? I want to put in as well. Then could be. Okay, that is. But even so, you still have to call him to know where's the price. He put the PO, then become a low risk trade for you. Okay, but for us, we do not have this kind of indication. We only use this one as a reference. Okay, so I hope that's clear all. So let's go to the move one. Next one. So next one, let's let me next one. Okay, So we know that this is a shooting star candle. So first of all, this is a CRS indication. This is a shooting star candle for sell. Okay, price comes from the uptrend. Now this is price. There is indication that it's going to go on a downtrend. So remember, guys, like I said, we must always break a structure. So this particular candle must break this structure here. Then we will know that price has reversed after reacted from the danger zone SNR. In this case, you can look setup in this area. Okay. Sometimes price do not come back here, but price react to this area and then continue on downtrend. So in this area, you can look for setup and make sure that the setup has to be inside the engulfing candle. Okay, not on the wick area. So in this case, the setup has to be inside this area. Okay, sorry, it's from here to here.
Yeah.
The lower wick yen, yes, we can count, but not on the upper wick. Okay.
So just to share with all of you, like Teacher Nora always say that every engulfing, there's a story inside it. There's a story. So the purpose is actually no matter what, experienced trader, we got to do multi-time frame. For example, let's say now hold draws here this big engulf. All right, I'm going to change a different color. I'm going to use purple color. This purple color engulf. Inside here, there probably could be a drop, base drop, or there'll be a setup, there'll be anything. So therefore, Teacher Nora is given a chance, if I want to share to everyone, and say, look for setup inside this engulf, which is the strongest. And this will be the best confirmation after a big rejection from the danger zone SNR resistance. So that's my sharing from Teacher Nora that she will say that, hey, you know what, Terence, next time you go share, look for setup within this engulf, because this engulf is a story inside. Just that we need to be hardworking to look for multi-time frame. All right, that's all. Thanks, Ho. Pass back to you.
Okay, good. Thank you very much. So come back to this one. Come back to the question. Okay, so like earlier on, who was asking this question again? About this tree candle.
Pina.
Yes, sorry. Yes, okay, good. Sorry, let me draw this. So this is a bullish angle. So let's say this is a bullish candle, right? Okay, price reacted in this area. So how many candles that you can use for it breaks this area is 3. Maximum is 3. Okay, maximum is 3 candle. So you don't require to remember the name of whatever, like we said earlier, 3 black crow, 3 white soldier, whatever. It doesn't matter. Most important part is you understand that if there is a 3, let me change back to the red color. There's a 3 candle, 1, 2, and then the third one break the structure. Then yes, this is considered as a CRS. Okay, so we don't require to know all the name. Not necessary to know. Okay, shooting star or whatever it is. There's no requirement. Most important, understood, is these 3 candles. Yes,
okay, quick quiz for all of you. What's the theory of 3 candles? Anyone want to share with us? What's the theory? Why 3 candles? Why not 2? Why not 4? Why not 5? But at least, I mean, maximum is 3, but nothing beyond 3. Why? There's a reason. There's a theory of it. And anyone want to answer it? You put in the chat box though. Hello. Hello. Anyone? Oh, besides Alan, anyone else? Are y'all still with us? What's the theory behind it? Why not more than 3 candles? Maximum is 3. Not sure either. No idea. Great.
Okay. Can you hear me?
Yes, Muhammad. Yeah.
Yes.
If like more than 3 candle, it's become like the red retest setup, right?
Yeah, you are right. Actually, my perspective, and because I work closely with Teacher Nora, she mentioned that we in the Nora Bystra is all about quick retest.
Quick retest.
Price, that's a memory. If you do more than 3 candles, price will forget about it. I mean, when price doesn't have memory, then it will just break through the price. So you are right, Mohammed. It's all about quick retest. That's a 3 candle, yeah.
Okay, teacher.
Okay, it's more data. Okay, yeah, you want to know one of the reasons? So come back to basic. I'm not sure whether you guys familiar with this one. I'm going to draw something like this. So let me draw. Okay, so for this case, let's say you have one bull candle. Okay, so it one bull candle. Okay, and then price, and then we have another one is the price like this. Okay, so it reacts to this danger zone. 1, 2, 3, 4, 5. Okay, example, and then it comes back to the blue color, and then it makes one big bull. Why? Why must be maximum of 3 and not more than 3? Okay,
Momentum.
there is no. Sorry,
It says the momentum.
is it momentum?
Doesn't-
Okay, one. Yes, momentum is correct, but if you can see what is price doing on here in SND for supply and demand. This is very, in the higher time frame, it will look like this. In the smaller time frame, it was smaller time. Let me draw a smaller time frame. Okay, smaller time frame, let's say multiple bull. All right, smaller time frame, what price is doing is like this. Then you will see
that-
on the bigger time frame is like this. Small time frame is like this.
Is that
Very familiar?
compression?
Yes, exactly. This is what we call compression for what we call in SND compression. Why? What does it mean by compression? Can anybody let me know what does it mean by compression? Why price moving like this?
Looking for liquidity to go in the other direction.
Exactly, looking for more liquidity. But what is actually price going on with? They look for liquidity is correct. So here has a big order, sorry, from the buyer. Okay, price is doing liquidity. So what is actually going on is here, all of the supply area are being taken. Means all the supply price here are being taken. Okay, so if you mark here, supply, you will see price will react to all this supply here. Okay, and then it will, once all of this supply has been taken within this period, then it's easy for the price to go on a strong momentum buy. So that's the reason why we only have maximum 3, not 4 or 5. The best one is like this. You have one Marubozu. Okay, if not one, even though like you have one, okay, 2, the third one has to be a strong one. Okay, it's the best. We do not want, let's say for this bull candle. So, okay, you have one like this, 1, 2, and then the third one is just a small one as well, even though it broke this structure here. Okay, sorry, even though it broke this structure here, but this is not a strong bull, means not a big bull like this. You have to watch out as well. Okay, have to watch out. Best is 1, 2 small, 3, the third one long one like this here, and this is where the big orders is always being kept. If you look at this one, is what we call drop base drop. Okay, if you go to a smaller time frame, this will look as a drop base drop. Okay, so all of this is all related to supply and demand. So SNR, people will use this not more than 3 candles. Okay, the reason why because of it is not compression. It is more like price taking liquidity in this area. Okay, price taking liquidity in this area before continue on the downtrend. So does that answer your question, Pinar? Or anybody
Yes,
has
thank
any? Yeah, you're welcome. Anybody has any more question?
Just to
Hope
share
all
with
is clear.
just to share with you, right? What Ho is sharing is price is always strongest when you have double Marubozu, all right? Which is this is the whole thing. That's why Ho mentioned that the Marubozu, why? It's a pure, clear sign of rejection. And that's the reason why Ho says that the candle got to be one huge bearish candle. If you buy, you got to be with one huge Marubozu candle. Why? There's an indication of price. So therefore, the chances are usually is when there's a big Marubozu, price will come back here. Price will definitely go back up. Then price come back here. Why? They want to find liquidity. So this is all the liquidity they are looking at. And therefore, look for this setup in the Marubozu candle. All right. Thanks.
I have a question on the compression. Can you set your pending buy order in the demand zone when the compression reaches the demand zone?
No. Okay. If a sandy trader, if you understand, like I said, if you understand fake out, okay, fake out, yes, you can put a PO. But if you do not understand fake out, to me, it's better don't avoid those, because okay, if those very strong supply demand traders, they will able to identify where is the SL hunting, and which one are the fake out, and what are the indicators of the fake out. Because fake outs, there are a few types. Okay, so we have the one is what we call the SR flip or RS flip. Second one is what we call the multiple resistance or multiple support. Third one is what we call a diamond. Okay, so these are the few indications. But besides that, there are a lot more again. Okay, it's what we call the left shoulder, right shoulder indication.
Yeah, actually,
break. Yeah,
actually, there's a lot more, Archie. I mean, in terms of the XND, if you want to talk about all this supply and demand theory, which is a lot more theory behind it. But then again, I prefer not to share so much more here, because not everyone will understand that perspective of like fake out, compression, or that. So I don't want anyone to get confused. We're going to make trading so simple. It's already complicated, so don't make it so complicated. I mean, it's already complicated. Try to simplify it. Don't make it more complicated. Yeah. Archie. They're all good, Archie. But if you would like to know more like fake out or that, yes, you can PM hold or that, no problem. We can discuss about that. But then again, it's already complicated. Stick with Nora entry to simplify and make money the best. All right.
I agree. Yeah, it's
All
simple.
Yeah, cool.
Thank
Cool.
you.
Let's simplify. Thank you, Ahmed. Thank you, Archie. Thank you.
So Archie, thanks for asking all those questions. I think if you look at one of the last few videos, I got put in a checklist. I think if you use that checklist, for your trading on how to check which are the confirmation, which means we have to use the 3 confirmations, then your trade will become much simpler and less risk. Yes, because it's all about mitigate the risk. That is very good. Because you know why? We mitigate risk by having a confirmation of rejection and also a setup confirmation. So we know all this confirmation, there is 3 confirmation, then our trade, we have confidence to trade. I think the moment when you start doing this very often, right? Even though you don't trade, but you track it as a front test, or you can use a paper account or what we call a demo account, then you get the confidence. Then after that, you understand it's much easier to trade this way. Honestly, it will be much easier to trade, because I don't trade every day as well. But this kind of system is very simple. Yes, it's all about practice in hand. After that, everything will be very easy. Okay.
Thank you.
You're welcome. Anybody has any other thing before I continue? Or else I just continue, okay? Terence, anything later you stop me?
Sure. Just continue, yeah.
Okay, so the SOP for confirmation of rejection, first of all, it must always touch the danger zone SNR first, okay? The danger zone SNR, and then the CRS of the candle must always close outside of. So if it's closed inside the zone, it is a high risk, okay? And we always mark our danger zone SNR at the weekly time frame, okay? So let's say the danger zone SNR at the weekly time frame, confirmation of rejection must always be 2 time frame lowest, okay? In this case, weekly, lowest is daily and H4. So I'm going to show you example here. I think all of you have seen this in the course, but I'm going to repeat it again, okay? So this is how we mark our danger zone SNR, and we can see that it must close outside of the zone. Price must touch the zone, okay, and close outside the zone, not up here, not up here. This is very, very high risk, okay? Same goes with the buy setup. Price must come into the zone and close outside of the zone. So as of now, anybody has any additional question regarding confirmation of rejection? Because confirmation of rejection is the first indication telling us that price might be going on the reversal trend. So we always want to buy where? Buy at support, sell at resistance. Okay, so we do not want to buy at resistance, sell at support. Doesn't make sense that way. Okay, so anybody has any question on this one as of now?
It's all good.
It's all good. Okay, so I hope you guys, what I'm trying to convey here is that I want you guys to understand, okay, why we must have confirmation of rejection, and what is the indication saying that, okay, the price has react at the correct zone, okay? So your danger zone SNR has to be correct, which is very simple, 4 steps, and also at the right time frame. Do not use the wrong time frame for the danger zone SNR, especially on the currency pairs, okay? And then price comes in, there's a confirmation rejection, then only we look for setup. I think one of the most recent trade that I share is the Euro AUD. Anybody has any question on the Euro AUD?
It's
No, right?
really good price action this week.
Yes, the Euro AUD was really very good. It rejects. It is a daily, weekly time frame. It rejects on the daily engulfing, and then at the on the weekly engulfing
Yes.
bullish candle, and then daily there's a QMR setup. However, we do not know which setup. Which shoulder is will the price react. In the end, we just mark few of the shoulders, and then when there is a confirmation of rejection on the H4, so instantly we can see that there's another setup on the M30, isn't it? So our risk was how much? Risk was very small. The price only flowed 3 pips. My gosh, price flowed 3 pips and the price went up more than 150 pips. It's very amazing, isn't it?
And after